India's largest tractor maker, Mahindra & Mahindra, that company came out with its first quarter earnings which have beaten analyst expectations. Profits were boosted by cost efficiency and strong margins in the automotive segment. We've got Vishal Bhargav, who joins us now with a detailed analysis of the numbers. Vishal, a very good quarter for Mahindra & Mahindra.
Well, absolutely, George. Very strong set of numbers coming from India's largest utility vehicle maker as well as tractor maker. Profits for the company surging about 40%. Profits at about 562 crores versus 401 crores. The 18 hour analyst poll suggested the profits would be in the range of about 500 crores, so it's come up fairly higher than that. And of course, top line also showing some amount of steady growth at about 5,124 crores versus 4,229. You mentioned the point in terms of cost efficiencies for the company. That's been one of the key elements that's boosted operating margins. With operating margins in this quarter stood at about 15.1% versus 14.3%. So that's a 0.8% margin expansion that we have seen. This is contrary to what most analysts were believing in terms of margins. The analysts were expecting margin contraction to take place. There had been a steady rise in terms of operating margins, and within the margin component there are two elements. There's the automotive segment as well as the farm equipment segment. The farm equipment segment has seen margins stable at 17%, but it's the automotive segment which has actually seen margins rise fairly decently. The margins are in that segment at 12.2% versus 10.2%. Wow, just one word in terms of raw material costs, that's been the element that's actually hampered margins for the entire sector. They have risen to a certain extent for the company as well. Raw material costs as a percentage of sales at 70% versus 66%. But all in all, a strong performance despite the raw material price rise on the back of margin expansion in the automotive segment as well as cost efficiency.